Hi, everyone. Welcome to your latest Carson's Take 5, Ryan and Sonu. Sonu, it's kind of cold where I am, but not as cold as where you are. I'm in California. Now, we're doing this a little early. That's why it's nighttime. But there's the pool. There's the hot tub. Oh, the hot tub's kind of blue. That's kind of neat looking, isn't it? What's the weather like in Chicago? How are you hanging in there?
Hanging is a phrase for it, but it's cold. It's January. It's January 29th. It's 0 degrees. It could be worse. Actually, no, it's about 20 degrees today. That's not bad, considering it could be like negative 20. So,
well,
glass half
full. There you go. Get your sunscreen out. The sun is coming out, apparently, warming up. But listen, I'm out here in California doing some client events. I've heard a ton of questions about the U.S. dollar. So that's what we're going to focus this week on the latest Carson's Take 5. Should we worry about the crashing dollar? So, Sid, I'll set this up and turn it to you. The dollar has been quite weak recently, right? The dollar's been going lower. I want your take on kind of why that's happening. A lot of worry about what does a lower dollar mean. I'll just put context around it. You look at a long-term chart. The dollar's trading where it was 4 years ago. The dollar's trading where it was 20 years ago. The dollar's trading where it was 30 years ago. And the dollar's trading where it was 50 years ago. It goes up, it goes down. Yes, it's come down lately. So I don't think it's a true crashing dollar like the media make it sound. But let's get into that. What does it mean for investors, this weak-ish dollar we've been seeing, honestly, for the last year or so?
Let's talk about why first. Why the dollar is falling. I don't want to say it's crashing, even though that's probably the phrase everyone else is using, a crashing dollar. What's happening is, as you mentioned, the dollar was really strong. I would argue maybe the dollar was too strong. And that was, as a result of that, foreign goods were expensive and things like that. And part of the reason is, look, the U.S. economy for several years was doing much better than the global economy, right? Okay. The rest of the world. Just as a result of that, you would expect the dollar to do better. This year, and maybe even last year, we've got a bit of a global economic growth surprise to the upside, whereas U.S. economic growth has fallen back to trend. Remember, in 2023, 2024, we were running at 3% GDP growth. We've gone back to trend. We haven't crashed, to be clear. We're probably at around 2.5% or something, but that's expected. But the rest of the world is seeing economic activity pick up. Just by that, you would expect foreign currencies to appreciate relative to the dollar. Now, the dollar going down is, by the way, not a bad thing. That is good for U.S. multinationals, because remember, 40% of S&P 500 revenues come from outside the country, outside the U.S., right? If you're earning revenues and profits outside the country, a falling dollar is actually not a bad thing as far as profit growth goes. And remember, that is what drives the S&P 500. Also, a falling dollar or appreciating foreign currencies are tailwinds for international equities. Those of us who have international stocks in our portfolios, a falling dollar is actually a tailwind. So there are positives in the middle of all this.
I'll chime in there. We've talked a lot about that. Last year, specifically, U.S. gained ballpark 19% on the S&P 500 total return. Europe was up in the mid-30 percentiles. Emerging markets up over 30%. And we follow, 45 major countries. The U.S. is actually one of the quote-unquote weaker stock market performers last year. We're not complaining. After two 20 for 5% years, 19's pretty good last year. But that lower dollar definitely has been a tailwind for international investors. Now, the other thing, obviously, is gold. I mean, it felt like the other day gold cracked 5,000, then it's at 5,500. I mean, it wasn't that long ago gold is 4,000. I mean, we all see this. So gold is, can we say, going bonkers? Is that the technical term? What's going on with gold? Is the dollar contributing to that?
Yes, a short answer. But I think gold has some other characteristics too. We are seeing commodity prices in general increase, and which is what happens when the dollar goes down. But again, that some of it is a function of, stronger global economic activity. People need more copper. People need more oil, more natural gas, more diesel, all of this stuff. So if demand goes up, you would expect prices to go up as well. So there's a positive story there. Of course, it's the other side of it. I think why gold is going up is inflation's elevated, right? The very fact that all these commodity prices are going up also tells you that, hey, the inflation outlook is messy. It's probably going to be closer to 3% rather than 2%. And then what do you have on top of it? You have fiscal deficits. We have tax cuts and all of that. Again, that's a positive for stocks, right? To be clear, right? Not so great for bonds, but it's a positive for stocks. And we have the president looking for a Federal Reserve chair, a new chair to replace Jerome Powell. And he's looking for someone who can drop interest rates even further, right? Which will probably goose the economy much more. And again, that puts pressure on inflation. And look, I think that's why gold is benefiting. That's why we're seeing gold above $5,500 an ounce, which is, as you said, bonkers.
It sure is. And honestly, President Trump hasn't been very shy about what he wants the dollar to do. He understands a lower dollar can kind of be, better for the economy, better for investors. So I'm not shocked by this. And clearly, like you said, there's a lot of pressure on the Fed. The Fed did just have an interest rate decision yesterday. Time of recording this, make it real simple. They didn't do anything. We've been talking a lot about that. We don't think the Fed's going to do anything. They're probably on hold until after Jerome Powell leaves the Fed sometime after May. We'll just leave that there. So, Sonu, let's wrap this up. Lower dollar, higher gold. Honestly, stock prices, time we're doing this, hitting new highs across the globe. There's a lot of participation, small caps, mid caps, large caps. There's a lot of gains for investors out there. How do you want to wrap up today's Take 5?
Yes, the dollar is going down, but as we talked about, that's a positive for not just U.S. stocks. It's a positive for international stocks. It's a tailwind for the global economy as well. A lot of foreign companies borrow in dollars. It's good for them when the dollar is cheaper. Right. So, and it's good for U.S. exporters as well, by the way. So, yes, the dollar is quote unquote crashing. We don't think it really is crashing, but a weaker dollar has a lot of positives.
That's a great way to sum it up. We are fully aware. Those are the concerns. Those are what you're hearing out there. Crashing dollar, crashing dollar. Again, take a longer term look at things. The dollar is trading right where it's been trading literally for the past 50 years. Yes, it goes up a lot, goes down a lot, but this we don't think is truly crashing. And there are some major benefits and tailwinds to a weaker U.S. dollar. Like everyone on this call, if you've been investing, you know exactly what we are talking about. So everyone, this again was the latest Carson's Take 5. We'll see everybody next week. It'll probably be colder. You know what? Maybe you and I will do this in California together next week. So no, you and I are in California next week. So we'll do it from California. It'll be warm when we do this next week. We'll see everybody then from California when Soto and I are together. Take care. Bye-bye.